Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 10K filing, and let me tell you, this one's got a little bit of everything. Community banking, Pennsylvania pride, and enough regulations to make your head spin. But don't worry, we'll decode it together. We're looking at Embassy Bancorp's annual report filed under Section 13 that shows all their financial activity during the past year. Embassy Bancorp is a bank holding company, which means it owns Embassy Bank for the Lehigh Valley. They're all about community banking, serving individuals and small businesses in Pennsylvania. They operate mainly in Lehigh and Northampton counties. It's a competitive market dominated by bigger banks and those tax-exempt credit unions. But Embassy focuses on that personal touch, trying to win customers who feel lost at the big national banks. For deposits, they're trying to offer services that businesses want and rates that are competitive. For loans, they focus on being careful with who they lend to, making sure borrowers can pay it back. They are making mostly commercial real estate transaction, consumer residential real estate mortgages, and home equity loans. They don't sell their mortgages, unlike many other banks. They also proudly state that they avoided those risky subprime loans and the recent fintech and crypto crazes that have created problems for other banks. They're a smaller reporting company, meaning they don't have to follow all the rules that bigger public companies do, but they are still subject to regulations to protect your money in the bank. Speaking of rules, the report talks a lot about banking regulations, especially those that affect consumers. The Consumer Financial Protection Bureau, CFPB, and other agencies are cracking down on unfair practices and making sure banks play fair. The company also need to keep certain capital requirements in case of emergency. These requirements are in place to make sure the bank can withstand something unexpected. They mention the Community Reinvestment Act, or CARE, making sure they serve all parts of their community. They talk about human capital management. That's the fancy term for how they manage their employees. As of March 14, 2025, they had 7,643,113 shares outstanding. The company's credit quality will always be the most important lending factor. The change in capital could establish a maximum percentage of eligible retained income that can be utilized for such actions. The company received a satisfactory rating in their last CARE examination, which is pretty standard. The aggregate market value of the voting and non-voting common equity held by non-affiliates is 72,465,972. Parts of this report will come from their official proxy statement, which will come out before their next shareholder meeting. Now for the fun part, the risk factors section. This is where they list everything that could go wrong, and it's a long list. Things that could have an impact includes the economy, interest rates, regulations, cybersecurity, and even global events. These events may cause harm to the company in different aspects. Their ability to make a profit substantially depends upon their net interest income, which is the difference between the interest income earned on assets and the interest expense paid on liabilities. In their consumer lending section, there was a range of home equity and mortgage products, including competitively priced first-time homeowner loans, which are retained and serviced by the company. Item 1B has 0 unresolved staff comments, which is a green flag. Of course, they talk about cybersecurity. With everything online, that's a major concern these days, and any major incident would affect customer or investor confidence and increase remediation expenses. The allowance for credit losses is how much money they think they might lose on loans that aren't paid back. This is a key number, and it involves a lot of estimates about the future. They go over the other regulations, including the consumer protection laws. Now let's get to what people really care about, the financials. The financials is where the company's real business is summarized. First, management says their internal controls are effective and that they have a report on internal controls over financial reporting. Second, we hear from that outside auditors, Baker Tilly, who give the financials a thumbs up and have been working with the company for a long time. Now let's dive into those consolidated balance sheets. The company has a lot of checks in the boxes, making them a non-accelerated filer and a smaller reporting company. March 14, 2025, there were 7,643,137 shares outstanding. We will want to keep an eye on this number. Throughout the 2024 year, the prices had high points of 13, 15, 16s and low points of 13, 15, 16s and low points of 13, 15 dollars respectively. A very small variance of cash dividend was paid on the common stock at $0.422 per share. The company saw their assets increase during the year ended in 2024. Gut loans and leases is an area that the company feels that they are maintaining a high quality portfolio that returns a reasonable market rate. Almost half of their loans are in commercial real estate, construction, and commercial, which is riskier than residential. The determination of the allowance for credit losses depends significantly upon assumptions and judgments with respect to a variety of factors. The last CRE examination was in 2022, and another one is expected in May 2025. The checkmark for error correction was set to false. There was no correction to previously issued financial statements. The Sarbanes-Oxley Act of 2002 was applicable to the equity securities. The CEO speaks to the entire team monthly, which provides training and general information. The company has adopted a code of conduct ethics that applies to all directors and officers of the company. Forward-looking statements are subject to risks, uncertainties, and other factors that could cause actual results to differ materially from future results expressed or implied. Interest rate is something that can affect the earnings and financial condition. Lending practices are subject to risk. The FASB issued an accounting standard on allowance for credit losses. Changes in interest rates and spreads could cause a loss of future net interest income and a decrease in current fair market values of our assets. The estimated fair value of the available for sale securities portfolio may change depending on the credit quality of the underlying issuer, market liquidity, changes in interest rates, and other factors. The geographical market they serve is highly competitive. The company strives to maintain simplicity in their policies and efficiency in their procedures. The directors and officers are committed to an ongoing commitment and understanding of the company's responsibility under the CRE. If their information systems are interrupted or sustain a breach in security, those events may negatively affect our financial performance and reputation. In the future periods, the charge-offs will exceed the allowance for credit losses. 24% of the loans are consumer loans. The company has strong competition in the market area. Liquidity is essential to the company's business. The next sections presents the company's financial statements and the relevant notes. The management of the company is responsible for maintaining adequate internal control. Baker Tilly Yes LLP was the auditing firm. The consolidated balance sheets include cash, federal funds sold, investments in the sale. The consolidated statements of income show that total interest income for the year ended December 31, 2024 increased $7.8 million. The consolidated statements of comprehensive income shows a few areas regarding gain or loss. The consolidated statements of stockholders' equity was for year 2024 and 2023. The consolidated statements of cash flow show cash flows. The summary of the significant accounting policies is broken down in the note section. Part 363 requires an annual report with bank regulatory agencies. The company's board of directors and officers are committed to reaching out to the community, to the shareholders and the board of directors of Embassy, Bancorp, Inc. and subsidiary. Section 23A requires that loans or extensions of credit to an affiliate, purchases of securities issued by an affiliate, purchases of assets from an affiliate, except as may be exempted by order or regulation, the acceptance of securities issued by an affiliate as collateral, and the issuance of a guarantee or acceptance of letters of credit on behalf of an affiliate, collectively covered transactions. Be on terms and conditions consistent with safe and sound banking practices. There is no Form 10K summary. It was signed by David M. Lobach Jr. at Camantit. After looking at the numbers, Embassy Bancorp seems to be a fairly stable community bank. They have not had much change in the last year and seem to focus on local relationships, see a big opportunity in better control of expenses, which are increasing relative to income. They talk a lot about what could go wrong, but this just makes sure that the company is covering all their bases taut. It could be a good fit for a conservative portfolio. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more corporate decoder breakdowns.